Welcome to Study Time, a televised home learning program produced by Rwanda Basic Education Board.
Hello students, welcome to TV learning programs. Once again, I'm teacher Julius, and today I'm going to learn with senior 6 students entrepreneurship. And our lesson today, it is statement of changes in owner's equity. Statement of changes in owner's equity. So we are still under our Unit 5 financial statements. So I want us to see or to look at or discuss and know what a statement of changes in owner's equity mean. So what do I expect you to know at the end of this lesson? So I expect you to be able to know what affects the capital account and how to prepare the statement of changes in owner's equity. So what is a statement of changes in owner's equity? When we say a statement of changes in owner's equity, statement of changes in owner's equity, So owner's equity, this is capital of a sole proprietor. So when you initiate or when you commence any business, when it is a one-man's business, that is sole proprietorship. So the amount of money that you start with, that is your capital owner's equity. So in this case, you must know, during a trading period, during the course of trading, there are many things, there are events that may happen to the capital's account. So a statement of owner's equity, it shows changes, it shows events that affect the capital account. That is, that they may increase the capital account or events that may reduce the capital account. For example, you may start the business, the trading period. You have started the trading period with a beginning equity of maybe 1 million Rwandan francs as your beginning capital or the beginning equity. Now, in the course of trading, there are some things that may happen. During the trading period, you may make a loss, you may make a profit, you may have some other contributions from well-wishers, and then you add more capital. You may have what you call drawings, personal drawings, all those ones, they affect the capital account, as we are going to see. Remember, in this Unit 5, when we started it, under financial statement. So we said financial statements, they are financial reports. They report the financial information of the business at the end of a given trading period. They show the financial position of the business. We talked about the income statement, which comprises of 2 accounts, the trading account, the profit and loss account. We talked about the balance sheet. We talked about the cash flow statement. Now, this is a statement of owner's equity, of which this statement of owner's equity, specifically its role, it is to show the changes that happen in the capital account. What affects the capital account? In other words, what can increase the capital of a sole proprietor in the course of trading, and what can reduce or what can mitigate the capital of the sole proprietor in the course of trading. So we are defining a statement of owner's equity. We are saying it is a financial statement that shows the changes in the capital account in a given accounting period. The given accounting period. It can be a year, it can be a month. That would be the accounting period. So we want to know now, within that accounting period, if you had capital of 1 million at the start, we want to know what happened in that capital account. So we are saying owner's equity can be increased by contributions. Owner's equity or capital can be increased by contributions. These contributions may be personal contributions, because if you start with 1 million as your beginning capital, in the course of trading, you may get more money. Then you add addition of more money. That will increase now the capital account, or the amount of capital employed here, will accumulate or will increase. So contributions, which may be from well-wishers, or they may be even donations from someone. Someone gives you money, then wants you to add it in your business. So this one adds, it is an addition to the capital account. Then during the course of trading, remember trading, that is the buying and selling of goods with an intention of making profits. In the course of trading, you have made a net profit. You have made a profit. So these profits, the net profit or net income, the net income here will increase the capital account. The net income will will increase the net account. For example now, if you made the net income, the net profit that was realized in the course of trading, if it was maybe 500,000, the 500,000 will be added to this. So a statement of owner's equity shows the changes, the events that affect the capital account in the course of trading. So we can also look at what could be some events that may reduce the capital account. You must know that capital can also be reduced by some things. In this case, capital can be reduced, can be affected by these events negatively, can be reduced by what we call withdrawals. These are drawings, withdrawals. So drawings, the amount of money that may be taken out by the sole proprietor or by the owner of the business for personal use, self-use, private use. Those ones are withdrawals. So drawings or withdrawals reduce capital. So remember in the balance sheet, we have this kind of statement of changes known as equity. Because you have capital, you add net profit if you made it, then you raise drawings if they were made. That statement, it shows what happened in the capital's account. So capital can be reduced by withdrawals or drawings. If you started with 1 million, you made some profit, you added it, then in the course of trading, you decided to get out like 200,000. And this 200,000, you took it and maybe you gave it to your relatives. This 200,000, maybe you went and bought shoes. You went and bought some other things, personal use. So this amount of money, these are drawings, and therefore they reduce the capital available in the business. Drawings reduce the amount of capital in the business. They affect the capital's account negatively. Then you may find that also during the course of trading, you made a net loss. This is something that may be inevitable or something that we may not avoid. A net loss made by the business. If during the course of trading, a net loss was incurred, in this case, this net loss will reduce the capital available in the business. So a statement of changes in owner's equity shows the events that affect, shows the changes in the capital account during the course of trading. During the course of trading. So, and you can look at if it is a sole proprietorship. These 4 events, the contributions, which may be by the owner of the business, the additional capital added, or maybe by well-wishers or by family friends, by family members or friends. Then the net income or profit made by the business, the withdrawals made by the sole proprietor, the net loss made by the business. The 4 events, they affect the capital account, or what you call the statement of changes in owner's equity. Then it will show all those changes that, or all those events that affected the capital account. So you have to know that the statement of changes in owner's equity can be presented with a simple equation, where you get the beginning capital, you add any additional, then you subtract things or events that may reduce the capital account. So what you get will be the ending capital or the closing capital. So let us try to look at example 1, and we see how we can work it out. So we have our example 1. which I want us to work out. And we see how do we prepare the statement of changes in owner's equity. Assume that KK Company Limited started the year 2019 with US dollars 100,000 capital. During the year, the owner made 10,000 US dollars additional contribution and 20,000 total withdrawals, and a loss worth 3,000 US dollars was made during the year. Prepare a statement of owner's equity of KK Company Limited. So how do you go about that now? So the first thing is the title, KK Company Limited. KK Company Limited. Then we have the statement of owner's equity. Statement of owner's equity. It is very simple. Statement of owner's equity. Remember, and this is for the year, the trading year, for the year 2019. For the year 2019. So this is the title that we have. The name, it has to be in 3 lines, or 1 line, but having 3 components. The name of the business, or the company, the report, or the financial statement that you are preparing. In this case, it is a statement of owner's equity and the period covered. This is a statement of owner's equity for the year 2019. So that's what we are going to prepare. Now, from there, you have to look at the beginning equity that we have in our question. The company commenced with the beginning capital of US dollars 100,000. So you have to write it. Beginning capital, the beginning equity, which is the beginning capital. We have the beginning equity, which is, we have US dollars 100,000. So those are our US dollars 100,000. Then from there, you have to check in our question. Was there any addition? If this was the beginning equity, check and see. During the year, the owner made 10,000 US dollars additional contribution. So you have to add it there. You have to add owner's contribution. He added more money, owner's contribution. This will increase the capital available in the business. You began with 100. Then in the course of trading, you add more. So more 10,000 US dollars was added. So you can check, more 10,000 US dollars was added. So if you add, you can check now, 100,000 you started with as a beginning equity, then in the course of trading, then you have added more, 10,000. So we expect now your capital to increase to 110 US dollars. 110 US dollars. Now, if you look at this, now this is the total capital that you have. We want to see if during the course of trading, during the financial year 2019, were there some subtractions or withdrawals or whatever. So we have total withdrawals of 20,000 US dollars and 30,000 US and 3,000 US dollars that were made. All those ones are subtractions. All those ones are subtractions. So you have to less. You have to less withdrawals. We have total withdrawals, which they have told us. Total withdrawals. And our total withdrawals, they are giving us 20,000. So you have to less US dollars 20,000. US dollars 20,000. Then you have also to less 3 3,000 US dollars, which we have, and that is the loss that was made. There was also a loss made. The loss made here, it was 3,000 US dollars. It was 3,000 US dollars. Now we need to know now what will be the closing or the ending equity. So we have to know the ending equity or the closing capital, the ending equity. So the ending equity. So you have to get out this. Get 110, you subtract 23 US dollars. So if you get 110, those without, you count with me, those who don't have calculators, subtract 23. Because the total subtractions, it is 20,000 US dollars plus 3,000. So when you subtract this, then you should be able to get our final ending or closing equity. So 0, 0, 0. 0 minus 3, impossible. So when you borrow here, it becomes 10. When you get 10 minus 3, you get 7. So here we have 0. So 10 minus 2. So it becomes 8. So if you can check, we have our 87,000 US dollars. So that is our ending equity. This is our ending equity. So this is now a statement of changes in owner's equity, showing the events that may increase capital, like owner's contribution, and showing events that may reduce the capital, like withdrawals or drawings, and any errors that may be made or incurred by the business or by the sole proprietor. So this is a statement of changes in owner's equity. It is very simple, which can be presented in a simple equation, even in the balance sheet. So the owners or the statement of owner's equity reports the changes in a capital account. I have question 2. Example 2, which I want us to work out also. Chabitama traders started the trading period of January 2018 with equity worth 3 million Rwandan francs. So what do you do now? I want the name first. So you have to write Chabitama traders, Chabitama traders. This is the name of the business. The business is for Chabitama. Then we want to prepare the statement of owner's equity. The statement of owner's equity. The statement of owner's equity. For which period now? It is for the year 2018. For the year 2018. This was the trading period for the year 2018. So your heading should have 3 things. The name of the business, Chabitama Traders. The financial statement or what you are preparing. In this case, we are preparing a report, a financial report, which is the statement of owner's equity, then the period covered for the year 2018. So this is a full title that qualifies for a mark, or to be very correct. Now we have to see, do we have the beginning equity or capital? So Chabitama Traders had the beginning equity of 3 million. So we have beginning equity. The beginning equity, Chabitama Traders has the beginning equity of 3 million Rwandan francs. 3 million Rwandan francs. Now you have to check and see, do we have more additions that were made during the trading period? Do we have more additions? You have to check. You can check during the year, 500,000 was invested. So we have additions. You have to add additional capital. additional capital of 500,000. Then you have to check if there is any profit that was made. The net income during the year was 800,000. You have to add it also. Add the net income, which is 800,000. So when you add this one, they're all Rwandan francs, you will get 4,300,000. 4,300,000 as our total capital that we have now. So we want to see now, do we have the subtractions? Was this capital affected negatively? So you have to check if there are some events that may reduce this capital that we have, and you less them there. In this case, she decided to take 200,000 for personal use. Those are drawings now. If you start a business with some amount of money and you take some out, that amount of money is called drawings and it reduces the capital variable. So you have to subtract the drawings. And drawings here, we have 200,000. So you have to subtract 200,000, Rwandan francs. Then again check, there was a loss of 300,000. That loss also reduces the capital. You less the loss of 300,000 Rwandan francs. So we have now to see the ending capital. At the end of 2018, what is the net capital that is available that we have? So the ending capital or the closing equity. The ending equity will be how much now? So try to subtract. You get 4,300,000, you take away 200, you take away this. So this, you remain with 3,800,000. 3,800,000 Rwandan francs. So this will be the ending capital. So all this represents a statement of changes in owner's equity. Events that affect capital count, that is positively, these additions, and negatively, these subtractions. So this is what we call a statement of owner's equity. So you should be able now to know how to prepare this financial report that reports what takes place, what happens in the capital account in the course of trading, Any withdrawals made for personal use, not for business use, then they will reduce owner's equity. Additions like net profit, net profit or net income, or any additional capital from well wishers, that will increase the capital that you had. Then from there, you should know now how you can prepare a statement of changes in owner's equity, which reports what happens in the capital account. So this is one of the financial statements or one of the financial reports. Remember the financial statements that we talked about, the income statement that comprises two accounts, the trading account and the profit and loss account. The combination of the two accounts, they form an income statement or statement of financial performance. We talked about the balance sheet or the statement of financial position. We talked about the cash flow plan or the cash flow statement. And now here, this is the statement of owner's equity that shows what happens, what takes place, what may reduce, what may increase the capital in the course of trading. So before I wind up our lesson, hope you have understood how to prepare what may affect capital positively and what may affect the capital account negatively in the course of trading. So before I wind up, I have an assignment for you guys that I want you to work out. So we have this, whereby we have Keza Enterprises started the trading year with a capital worth 300,000. And the profit, 150,000, was made. You can check, there is this word, was made. You have to look at it. Was made, and the profit, 150 was made, and a well-wisher contributed. You can see here, a well-wisher contributed for her 200,000. And the drawings, 100,000 were made, and the loss worth 50,000. So I want you to prepare a statement of changes in owner's equity. Check what could have increased her capital, and check what could have reduced her capital. Then you arrange them in this way that we have done these two questions. Then you will be able to get a correct financial report that is reporting that will show us what happened in the capital account of Keza Traders. Thank you very much for watching and listening. We meet next time. Bye-bye.